SBA EIDL Loan breaking news, SBA EIDL disaster news, as well as how to get up to 350,000, perhaps up to 5 million with an alternative through an SBA 7A loan program, dropping the EIDL interest rates from 3.75 to 1%. And how about 0% interest for 6 to 18 months and more? Hi, welcome in. This is Michael with Viral Funding Solutions. I'm an expert business loan broker, and I am going to be dropping you some news. Perhaps you haven't been hearing about the latest with Hurricane Ian in Florida, as well as Hurricane Fiona in a few other locations, such as that being Puerto Rico, and where to find all this information, how to get ready for the payments that are coming up this month. For those of you, a lot of them in November, December, etc. And I've already created content on how to get access to your back office in different ways. And I'll try to link you that video down below in the description if it isn't there already. Now, what you're looking on the share screen right there, it says Hurricane Ian. So I will walk you guys through with this navigation tab from top to bottom, and I'll show you other resources of how to identify what's happening. But first and foremost, the restaurants out there are fighting for lowering the interest rates, completely terminating the accrued interest rates throughout that 30-month deferment period and more on that from there. And what's happening is they're trying to lower it because they've been heavily impacted, and perhaps you're in a different industry and thinking the same thing, and you're not the only one, and other people are fighting the same thing. So what you'll see happening is if the restaurants are fighting to drop this, so will other industries, manufacturing, construction, retail, medical. I'm sure that'll happen down the road, and perhaps it can be an overall adjustment. And for now, though, we're seeing a lot of the restaurants fighting that. And perhaps I'll show you guys on the share screen in another tab that I have open how that looks and so forth. Now, let me jump into this and guide you through it. So this is Hurricane Ian. And again, I'm going to show you a few supplemental things with information, how to get these types of funds if you've been in the area, in surrounding counties, etc. So this is the disaster assistance for homeowners, renters, nonprofit organizations, and businesses of all sizes affected by Hurricane Fiona. And through our table of contents here, you will see what we'll go through. And right below that, you see apply for a disaster loan. We'll go there, but in a moment, let me go through this first, and then I'll show you. So on September 24th, 2022, President Biden, he approved an emergency declaration for the state of Florida in anticipation of Hurricane Ian. And then this page will contain all SBA news information and programs related to this disaster. And if you would like to learn more information on not only this, but the SBA EIDL Loan, as well as all other programs that I'll be speaking about, like the SBA 7A, then down below, there will be more resources as well as a free business loan questionnaire form where you can get a very customized, personalized email response on your best funding option and options by a true business loan broker expert who really cares about you as a human first. Now, over here for additional information, what DHS and FEMA do, we can go through that, but we'll skip over that a little bit. And then we'll go into where it says eligible areas for SBA disaster loans. So in the Florida counties of Charlotte, Collier, DeSoto, Hardy, Hillsborough, Lee, Manatee, and I won't list them all, but you can see them on the share screen. Feel free to rewind this if you need to, just be a lot to list. But if you're already well aware of this, then just hang on. I'll show you more information on what you can do. So deadlines for submitting applications, and these are subject to change. We've seen it a little bit, so there could be an updated version. But here, where it's stating physical damage, if you endured any type of physical damage, November 21st, 2022, and that's subject to change, and I'll show you that. Economic damages, June 21st of 2023. And then this information has been updated as of September 30th, 2022. So we could have seen some differences, and you'll see that. So what are the types of disaster loans available on top of the economic injury disaster EIDL loan that we are all aware of, but perhaps we don't know about what other things we can get? Because let's be honest, if you're looking for EIDL funding, you're needing it for COVID relief purposes. It may not be pertaining to, hey, I got to build something in my building. I need to construct something with my home. I need to get things back in shape. So the EIDL loan, a lot of it, you're using it for working capital purposes. So you have at the top here, home disaster loans, loans to homeowners or renters to repair or replace real estate or personal property, including automobiles. Number two, business physical disaster loans. These are loans for your business to repair or replace disaster damaged property you own, including real estate, inventory, supplies, machinery, and equipment. Now that is huge. Before I move any further, look how much they're opening up this business physical disaster for. That is huge. So if you endured any of this, one or more of them, this is a huge relief. Businesses of any size are eligible. Private nonprofit organizations such as charities, churches, private universities, etc., are also eligible. So I know a lot of nonprofits right now, and especially those who I'm trying to help in other ways, so in other ways of financing that are not as common, but they are possible. Economic injury disaster loan, otherwise known as EIDL, working capital loans to help small businesses, small agricultural cooperatives. Let me move this. I apologize if it gets dark because I have my HP lighting on. I just want to make sure I see everything. Cooperative small agriculture businesses and most private nonprofit organizations in the U.S. in the U.S. of all sizes to meet their ordinary and necessary financial obligations, which they have been unable to meet as a direct result of the disaster. These loans are designed to provide assistance throughout the entire recovery period. And there's a Hurricane Ian fact sheet. And then get help with your application. Let me bring this back up. And if I hadn't said this in the beginning, if you're joining me right now on this live, please give me a hashtag live in the comments, or let me know your thoughts on all of this and your specific situation. If I've yet to email you back, fill out the questionnaire. Please be patient with me. I will get back to you. I've gotten back to quite a few people today, and if you're one of them, you may have another email sitting in your inbox. Please look for it. And then get help with your application, disaster relief jobs. And then there's one about Hurricane Fiona, which I'll jump into in a moment. But if we clicked on Hurricane Ian fact sheet right here, it'll bring us to this page, which I already had open in a different tab because I got through there elsewhere. But let me see. Okay, we'll follow up on this one because I have it already open. So you can see here, disaster declaration details, disaster number, Florida 00178. The effective date that this was pushed, as we were talking about with Biden and et cetera. Incident period, 9/23/2022 and continuing. States that have been affected, Florida for this circumstance. Primary counties, as I mentioned earlier, or more or less I showed you on the share screen. Counties eligible, and there you see, Florida, Glades, Henry, Highlands, Broward, excuse me if I mispronounce some of these, Miami-Dade, Monroe, Pasco, Brevard, Lake Indian River, Okeechobee, Sumter, Alachua, Bradford, Clay, Marion, and Duval. And if I come down here a little bit, and we'll get into Hurricane Fiona in a moment, but we click this, and I should already have it open in another tab. Let's see if I can come back to what I want to do is see if I can do it this way. I'm trying to make this the easiest way possible because I have multiple share screens open. And all right, let's do this. I can just backspace it. And again, if you're watching me here on the replay, please hashtag replay so I just know when you've been watching and the time respective to that. Now over here, you're going to get a little bit more information as to Hurricane Ian and what its parameters are. So you see Small Business Administration Disaster Declaration Number and Florida Disaster Number, as we saw earlier. Presidential Declaration of a Major Disaster for the State of Florida. Agency, U.S. Small Business Administration, and where it's coming through. Action, it's noticed. Summary, this is a notice of the Presidential Declaration of Major Disaster for the State of Florida, FEMA 4673-DR. Date, initiated 9/29/2022. The incident that it's a subject on what we're focused, it's Hurricane Ian in this one. Incident period, 9/23/2022, and continuing. Dates issued, you see that again, 9/29/2022, common theme. Over here, you're seeing the dates then change for physical and economic injury disaster loans. So for physical, you're seeing 11/28/2022 deadline date. The EIDL loan application deadline for that would be the 6/29 of 2023. So you have quite a bit of time for the EIDL loan. But when it is in effect, and I'll show you guys how to get access to this, is don't wait. Like any regular EIDL loan, whether you've been affected by Hurricane Ian or not, you never want to wait until the end. It's like getting a different type of a business loan through a private lender, another type of an SBA loan. Like I tell a lot of individuals right now is to not wait forever to put in an application. And I'll jump onto the SBA 7A here in a moment. But address you see here where it would be sent to, For further information, who you can contact, a Escobar Office of Disaster Assistance, U.S. Small Business Administration, and then it gives you the address to that as well as a number. So you could document that, write it down, have it ready to go. Supplementary information. Notice is hereby given that a result of President's Major Disaster Declaration on the same date we spoke about, the 29th of September. Applications for disaster loans may be filed at the address listed above or other locally announced locations. The following areas have been determined to be adversely affected by this disaster: primary counties, physical damage, and economic injury disaster loans. Then again, that just reiterates what I said earlier. You can see that. And contingent counties for EIDL only. So it's a difference when you're seeing who is eligible for physical damage and economic injury loans. You're seeing Charlotte, Collier, DeSoto, excuse me if I said that wrong, Hardy, Hillsborough, Lee, Manatee, Pinellas, and Sarasota. So you can see a little bit of a difference into how it's separated within these types of funding programs. Contingent counties for the EIDL loans only in Florida: Broward, Glades, Henry, Highlands, Miami-Dade, Monroe, Pasco, Polk. And before I move any further, if I hadn't already said this, I hope you guys are okay if you're in the state of Florida or you have a loved one, friends, and family, as well as in other locations like Puerto Rico and other hard-hit areas, whether it happened now, recently, or you're getting ready for something. Be very careful. Understand the electricity grid. Understand what is available, food, shelter. I really am pulling through for a lot of you, hoping everything is going okay and then you're pushing through these hard times, because even if you're not in that state, I'm looking after you and I'm caring for you from Washington over here, and you're in Florida. I've been out there. I visited in Orange County, I was going to say, but I was meant to say Orlando. I've been out there, and I've been in a few little areas around the surrounding counties. And it's a great state to be in, always sunny. And it was just a fun experience. And so I hope everybody's doing well, your friends and family. But let's continue moving forward with this. So the interest rates are, you're seeing this for physical damage, homeowners with credit available elsewhere at 4.375. Homeowners without credit available elsewhere, 2.188%. Businesses with credit available elsewhere, 6.080. Businesses with credit available elsewhere, you're seeing that again, that being 3.040%. Nonprofit organizations with credit available elsewhere, 1.875. So we're getting very low. Nonprofit organizations, you're seeing a common theme. Without this time, 1.875. For EIDL, for economic injury, businesses and small agriculture cooperatives without credit available elsewhere, that's at 3.040. Nonprofit organizations without credit available elsewhere, 1.875. And the number to this disaster for this physical damage, and you see they're listed on the screen, a few of them. Catalog of Federal Domestic Assistance, and then the number followed by it, and then who it was signed by: Rafaela Monchek, Acting Associated Administrator for Disaster Assistance. So her Administrator Guzman, her side, she's working on this whole restaurant feud with dropping the interest rates from 3.75 to about 1 point, you could say 1%. And I have this on my screen here that now I will flip to. Actually, I'm going to hold off on that. Let me backspace away from this tab and then see if I can find my other tab opened over here. You're going to have to give me one moment. Unless I exited out of it. Let me see. Okay. I have my other tab open. I have to change screens whenever I'm bringing them up. So 1 second. I have this in Spanish. Just in case you guys have Google Translate, you can always use that to view it in Spanish. That's what I had right now for a second. Okay, so now let me switch over to this screen, and then I will go through another one in a moment. So once you come to this page, you see Disaster Loan Assistance. Let me pull this HP Enhanced Lighting. There it is. So the SBA offers disaster assistance in the form of low interest loans to businesses, nonprofit organizations, homeowners, and renters located in regions affected by declared disasters. And you're seeing a little bit more there. And then you can apply for assistance. You come down here. Here are the 3 steps for disaster assistance application in your process. Step 1, check disaster declaration. See if the SBA has issued a disaster declaration in your area, which we already more or less checked that out with Hurricane Ian. I know there's Hurricane Fiona, and then there are another few disaster locations and events. Apply for a disaster loan. Number 3, check your status. So with number 2 here, loans are available for businesses and homes affected by the disaster. And then check your status, log into your account, and check your email for updates. And then down here, if we scroll, types of disaster loans, you're seeing, again, I have the HP lighting, so I can't see loan ethics without this. Home and personal property loans, physical disaster loans, EIDL loans, military reservist economic injury loans. So if I clicked on one of these, I can go here and I'll view more information. Not a lot is always released. More can get updated over time. And you'll see, you'll be shown how you can apply for this. And I'll leave more information down below. But what will happen is you'll go back into your back office and you'll have more information on how to apply as you do with your EIDL loan, etc. And so let me come back here. Step 1. If we go down here, this is the page I wanted to show you now. You would come down here, go to Hurricane Ian in Florida. Now, if you're in Puerto Rico, which we're seeing from 9/17 and continuing, still continuous, and then one below this, Hurricane Ian, Seminole Tribe of Florida. And then you see some of them that are a little bit past date. And then if we scroll up here to Arizona, Texas, hard impacted areas. So if we go over here to Hurricane Fiona, and I have quite a few people, personal and business relationships with, who have been affected by Hurricane Fiona. And you can see here the primary counties. I won't list them all, but contiguous counties, you're not seeing much of that. And then the fact sheet, you can get it in Spanish if you wish. And then PR 17640 disaster declarations, similar to what we saw already before that. You know, if I were to open that, it'll be more or less the effective dates. The same thing you saw with what you saw in Hurricane Ian, you're going to see more or less with ones like Hurricane Fiona and similar things like rates and who it's been signed by, similar individual, Rafaela Monchek, and a few individuals that you cannot see on the share screen right now, but I have it open in another tab. Now let me return to search declarations, and let me look if I have my other tabs open here, what I'm missing in case I need to show you more. 1 second. I believe I've shown you that. Okay, now let me flip over to this screen. Oh, before I do that, though, I want to show you guys a little bit more. Okay, so apply for assistance. We click that button. You'll likely be brought to this page with terms and conditions. Just make sure you read through it. It's not long. And what they're expecting. Federal laws and regulations may result in criminal, civil, and or administrative action. Just be careful. I know with a lot of stuff happening with fraudulent activity, make sure you are eligible first and foremost. You know, you want to accept it. And I won't go through my back office and show you all that. I won't get into confidential information. But you're going to see SBA Connect is using login.gov to allow you to sign in your account safely and securely. So you'll want to go ahead and enter your details. And if you're a first time using login.gov, you want to create an account, click here, and then you'll go through this process. Select your email, language preference, enter your email. For a lot of you who speak Spanish and it's your primary language and you would prefer that, and perhaps you already know how to speak English or you don't, and you prefer hablar en español si quieren esto, this is where it is for you guys. And francés, you see there, I was going to give you guys a little bit of French, but I'm not much of a French speaking individual. So that's where you guys can begin. I read and accept the login.gov rules of use. You guys can check that out as well. And then from there on out, you have your account built. Okay, so now let me switch over to this tab, and then I'll get into the standard 7A program after this. Again, all information will be down below, and I'll keep updating you over time if anything does change. I will have the SBA information down below in the description, other loan programs, but that questionnaire form is the best place to begin if you haven't. And if you have, I'll get back to you soon. Now, here on this page, more or less what I already told you in the beginning with the COVID EIDL loan and restaurants going up into the whole National Restaurant Association battle with the administrator, with Administrator Guzman right now. There's been a letter sent to her on helping them find COVID economic relief because they've been hit hard, not because of Hurricane Ian primarily or Fiona, etc., but it is because they're not able to sustain their business in these type of times with this economy. And I get it. I've been out locally to my restaurants that I go to and those that I don't, but I know those owners and I know those individuals and I know how hard they're going through things. And it's not the only industry. They're not only the exclusive one. So key findings, I mean, there's a bit of data here that I won't run into, but the National Restaurant Association research group, they conducted a survey of 4,200 restaurant operators between July 14th and August 5th of 2022. This report contains the key findings of the survey, which I won't cover them all, but like 88% of operators say their total food and beverage costs are higher than 2019. So we're seeing a lot of that, and I'm seeing it here within the community as well as in other states. 86% of operators say their total labor costs are higher than 2019, and I see that a lot, especially if I'm asking for year-to-date financials, profit and loss, tax returns for certain types of business funding, non-EIDL loan related, or maybe it's not a form of an SBA 7A loan, perhaps it's another form. And so you're seeing a few bits of data there. Restaurants took a number of actions in recent months as a result of higher costs. 91% of restaurants increased. This is a very common thing, and I know this, I'm sure you do, especially if you work in this industry. Increased their menu prices, while 65% changed the food and beverage items that it offered on the menu. And there are various reasons that is to attract a different clientele, to just offer more variety so that people can order more, for the fact that maybe they thought their existing product weren't working or it wasn't as effective, so they had to charge more and probably spend on more to acquire more and make more. And so there are a lot of problems. These are just some of the many. And I've worked in this industry helping out a lot of business owners, not the only one. I've worked with just about every industry out there: manufacturing, construction, medical, retail, restaurants, technology, you name it. Those aren't just the only ones: trucking, transportation, logistics, the list goes on and on. Now over here, 60% of restaurants reduced hours of operation on days that it is open, which is true. I see that here, while 38% closed on days that it would normally be open. Now that's huge, a huge number of 38% closing. And on days that you would be open, whether that's a day to two or more, that's a lot of money you're losing. Perhaps you're making 10 to 12,000 per day in sales, or it's more or less that. And that's a huge chunk. So your revenue dipping. And when you go apply for business funding, non-EIDL loan related, you're seeing what's happening. You're seeing your decrease in revenue and why you're getting approved for less. And I see that every day. 44% of operators say they postponed plans for expansion. 40% of the operators say they stopped operating at full capacity. 40% cut staffing levels, while 29% postponed plans for new hiring. 24% say they incorporated more technology into their restaurants. 16% of operators say they eliminated third-party delivery. So also what I'm hearing from all this is a lot of merchant processing systems being added or updated, new technology being brought in, new ways of enhancing the menu. But is that the best thing you should do, or work on iterating a form of it and figuring out different ways? There's just some numbers there, and just dropping the 3.75 to about 1%. And that's quite a stretch. We'll see if it ends up happening and how they can mitigate risks by bringing that down. Restaurant owners or operators expect business conditions to remain challenging. You can see some more numbers there. I go down here, you'll see a little bit more. I won't cover them all. Maybe I'll leave you information of this down below, but you can look through it, and I'll also guide you on how to get there. And there's more information, as you see. We can scroll down there. So if the interest rates go down, that's another question. 46% say they will be able to make principal payments, but not the 30 months of accrued interest. So that's why they want to drop it down as well. And up here, among restaurants operators who have not made an initial payment on their loan, only 23% say they will be able to make a scheduled principal and interest payments once the payment deferment period is finished. And we're there now. And so whether they'll defer it is yet to be determined. Like, hey, we'll have you make your initial repayments on how much ever you can repay, but in time we may cause that to stop and then defer it. And until more information in that comes out, and it may just be specific to restaurants, but if they did it with restaurants, I don't see why they wouldn't do it with more industries. And this just is a case because they've been hit really hard, and it's one amongst the most, them transportation, and a few other industries. And other industries are just growing rapidly. So those who use their EIDL funding perhaps don't need it anymore or are still needing more, but they're looking for other alternatives, which brings me to my next point, and I want to jump into the SBA 7A loan program. So give me a second to switch tabs. And if you're inquiring about PPP loans right now, just a lot of fraudulent activity in the forgiveness part of that. Already with EIDL, the repayment period, deferment periods is yet to be in concrete details, but it's on a day-by-day basis, so it can change. And ERTC, Employee Retention Tax Credit Program, I'm helping quite a few people. I've actually had to text a few of you today. Perhaps I'll call you. There's not always a necessity to that in cases there are. But if I sent you the material and I told you how to navigate the process, it's in there. So you can get started and get up to $26,000 per employee, sometimes up to $10,000, depending on quarter basis and how long the program will actually keep sustaining. So I wouldn't wait too long. That program is not going to be available forever. So get started, and I'll have more information of it down below. Now let me move the screen over. And let's focus on the SBA 7A Express up to 150K, up to 350,000, and perhaps the standard 7A program up to 5 million. Between 350 to 5 million is usually the sweet spot. And these are usually up to 10-year working capital loans. You can use as a consolidation. I just spoke to a business owner today in the manufacturing industry. Perhaps you're in here watching. I won't say any names. I'll just, focus on the behavior and say, I've emailed you as well as a few other individuals today, and I have more to email as the days go on, and those of you who I've already spoken to in the prior weeks and so forth. So there should be an email sitting in your inbox. I will politely reach back out via email, text message, perhaps DM, maybe a phone call if it's necessary, if you've kind of pushed this out too long and you haven't given me feedback. Just understand that. And I don't pressure anybody to take something that they shouldn't take, but just be aware that it's a form of consolidation. We can look at the SBA loans. We can look at the refinancing. We can look at using it for business operational reasons, but it shouldn't solely be used just for business operation. Nothing that'll produce to you a return on that investment where it can grow your monthly revenue month to month. Profitability wise, it would help. That'd be awesome. So it's more of a growth and expansion type of product, aside from the EIDL loan, which is primarily for economic injury disaster loans. And this one over here, the 7A, should be used primarily for fueling growth and expansion. And these projects are more longer term. They could be short term returns, activity and financially, or they can be longer term. So now let me jump into the share screen. But before one last thing, sorry. Down below, I already created content on this. What I'm about to show you in this document, I have already covered in another video. So I won't spend too much time. I'm just going to show you at a glance. But down below, I already created content on the SBA Express / standard loan. Check that video out, as well as all other information on this. So hybrid SBA 7A loan up to 5 million option, Express and standard 7A. It is open. Like I said earlier, I wouldn't wait until wintertime. I wouldn't even wait till fall is just in the middle of it. I would do it right now. If you're a qualified applicant, now is the time to do it. You guys saw the spike in interest from about 5.5 to 6.25%. So if the spikes were to go up before the end of the year again, one to three more times, you could be looking at interest rates above 12%. Right now, if you're looking at an SBA loan, you're more or less at 6.25 plus 2.75, or you can look at it as 6.25 plus 1 to 3%. And if it's an SBA Express loan, sometimes you see the rate a little bit higher. So you can say something like 6.25 plus 3.75. So maybe at a 10% minimum, 10 to 10.5%. And if it's variable, that's what could elevate it to about a 10.5 to 12.5 or so. And that's just when it's variable. When it's month to month or quarter to quarter, every 90 days, we're checking to see if the market has changed. And especially your industry, we might have to make an adjustment, whether we drop that or increase that, which isn't nothing wrong. And it's a bargain right now where you can get into. And remember, this is a business. You're looking to grow and expand it and raise your income, not just stay afloat. And, well, I'm going to go negative in cash flow if I take money. If it's an SBA loan, it'll help because it's a longer term. But other forms of financing people take, they don't really understand that the way you use that money, it's to increase your month-to-month revenue, if not your year-to-year, and if it helps profitability-wise, depending on the service and what you need to use those funds for. So what is the hybrid SBA loan that I've been speaking about for the last many months? The hybrid is two separate loans. One is an unsecured financing product, which is a term loan, unsecured with no collateral, line of credit, or cash advance, and or sometimes we can combine a line of credit with a cash advance, line of credit with a term loan, which can be funded easily and quickly. The other loan, it's a 10-year SBA term loan, which we can get a letter of intent within a couple of days, but it takes 6 to 8 weeks for you to actually receive the funds. Yes, this isn't a fast program. You're not going to get in and get the SBA loan in less than a month. 1 month, like I told an individual today, if I had to reach out to you and ask for supplemental documentation, would you be able to give it to me right then and there? Wait an hour, wait 6, 7 hours, maybe a day to two plus? The difference with somebody getting in a month time frame is me asking you for feedback, me asking you for supplemental documentation that the lender needs that I need to put into underwriting. Now, if you have it ready to go, and I'll show you the documentation needed so you're not asking questions, but if there's sometimes an agreement or something, another letter that we have to look at, maybe there's a revision, there's an extension in other forms, have that ready. So back to this, 6 to 8 weeks. And yes, you can get funding much faster. Let me move this over in case I didn't mention this. This is what the hybrid SBA loan is for. In the meantime, while you're getting looked at and approved for an SBA loan, whether you do or not get approved, and I'll show you the chances of going into it and understanding that you can get approved in a second. In the meantime, we can say, hey, Jerry, Sally, we can give you an injection of bridge funding. You qualified for $300,000 in an unsecured term loan, or you qualified for $100,000 in a line of credit. Which one sounds best to you? Or do you want the two? We can sometimes combine them. Or you got a cash advance. We got you a monthly repayment or a monthly lender, or we could have only given you a biweekly, or we could have only given you a daily, weekly, depending on your situation. Everybody's different. And you go, yeah, I actually was looking to purchase a truck and I don't want to wait 6 to 8 weeks, Michael. I want to get the funding right now. How do I get my hands on it? Oh, you got approved for $100,000. Well, the truck is $125,000. Okay, you got approved for $100,000 in an unsecured term loan. You got a $50,000 in a line of credit. Take the two. The $50,000 you have in the line of credit, you don't have to use it every time. It just sits there, and you only pay interest on what you use. It's almost like a revolving credit line, business credit building, and you only pay interest on what you're using, and it just goes back to the original amount. And in the meantime, you also have this unsecured term loan that you put in $100,000 of the overall, and then part of that perhaps you can use as a down payment. Or we look at another way to get you an extra down payment if you don't have it necessary, when maybe a cash advance on top of that will work. And so I'm outweighing all of these options, and you're seeing things now because I'm showing you that you haven't seen before. And you're like, oh my God, if somebody were to if I were to come to you and you would have just told me this, I would have never have gone bankrupt. I wouldn't have had to close my doors. I wouldn't have had to sell my business. I would have started my business this way. I would have acquired business funding this way, maybe not taking multiple positions. I was going fast. That's not what you wanted to do. You wanted to do things in a different format. And sometimes you have to do it that way because of the time period. And I get that. So back to this. Our SBA loans, they go up to $5 million. A business needs to be generating, and this is for the hybrid SBA loan. Keep in mind, and I'll talk to you about this a little bit. At least $120,000 a year in gross revenue and a 660 plus FICO credit score. And just so you know, when it's an SBA loan, consumer credit is important. So yes, 660 experience / FICO credit score, but consumer credit on all three is going to be important. But we're looking at least a 660 FICO there. You have that. That's for the unsecured products. But realistically, you want to be doing, oh, let me move this over. I think this was, I had a different document for this. I think I have it open in a different tab. So I updated a few things. Let me open it here. 1 second. Come back to this tab. Okay, so let me open up this email over here. And I'll show you guys what I'm talking about. Okay. have it right here. I have the most updated version, and it's customized as well for most individuals. So let me remove this. Let's go down here to see how much I had added. Okay, so I'm going to come back to this document. And there will be more information of this down below, as well as in the questionnaire if you guys have not submitted it. All right, there it is. Let me move this up a little bit. And move this over. Now we're good to go. So I'll bring up the font on this in a moment. So move this one up here. You guys can see that. Now, as we said, our SBA loans, what they go up to, 660 plus FICO. That's for the unsecured products. But realistically, you want to be doing north of 150K, if not 250K, for an express loan. So this is where I updated a few things. And because the lenders are always updating something. So you're seeing, realistically, you want to be doing north of 150K, but we can come in at 120K. Just know that if you have the minimum of annual revenue and you're looking for a SBA 7A loan of $2,700,000, $800,000, unless you had collateral to back that up, and then high value, probably commercial real estate, if not equipment, unpaid invoices, etc. Getting in at a minimum, and then what we do is encompass all factors and look at your business tax returns on top of your personal tax returns, what you've made, your profit and loss, and a few other components, EBITDA, and then debt service coverage ratio is a factor into how much debt you can take on. But we can take a whole look at that, and usually you get approved between 10 to 15%, if not 20% of your annual gross sales. On top of that, all of the documentation we can get you more because it's an SBA 7A loan. Now, that's what I said here, but realistically, you want to be doing that, if not 250K in yearly gross revenue for an express loan. So we can get in with 120K, if not 150, but a lot of the people who do come through that are getting approved for more in like the six figures, and there are some circumstances where it doesn't have to be that, but at 250K is a good amount, a good barometer to get in for these types of express loans. And up to 350K or even up to 150K, you can get up to with an express loan. Express loans, 150K, and even up to 350,000. Sometimes they vary between 20 to 350, 50 to 150, 50 to 350K. Or if you're looking for more than 350,000, what I recommend having north of 300K and 400K, if not 500K in annual gross revenue for a standard SBA 7A loan for approvals between 350K to 5 million. And it's not always the case. Like I said, if you had collateral or if you had another way of getting in, other people, they have like those quote unquote connections, and you have to be very careful with that and make sure it's legitimate, and it doesn't always end up working in your favor. So over here, you can see that. Let me reiterate what you should be doing. You can get in with 120K with this product. It has have a FICO credit score of a 660 and above. And with the 2+ years in business is what you want with an SBA loan. And there are a few circumstances with an express loan up to 350K and then up to 5 million with the standard loan. And with an express loan, I will say it's best to have a 680 and above. There are some lenders out there who would rather you have a 700 plus with 2+ years in business to get up to and have 150,000 in annual gross revenue to get a chance of getting 150,000, not 150,000 over, but just that alone. So you can see how benefiting from not just having a minimum of 660. If it's a minimum of 660, but your business credit outweighs your FICO and then you're cash flowing heavily, then that's a way to get in. But if you have minimal FICO, you're fluctuating way too much, your next month is going to be less and you're cash flowing less, you're barely doing the minimum of 120K and you barely have 2+ years in business, I can see why they wouldn't get you approved for, or maybe perhaps over 150,000 or perhaps over 350K. But these are numbers we can do for you. Now, in addition, we will need to see the 3 most recent business tax returns and 3 most recent years in year-to-date financial statements. In cases, we would just need 2+ years can be helpful if you have those, but 3+ years is much better. The SBA goes primarily off of credit score and profitability of your business with at least 2+ years of profitability. And it's best to have those most recent. And I know if we ask for 3 years, like 2019, 2021, it'd be best to have 2021, 2020 profitability. Note, if you already have an existing business loan that is not idle, we can refinance, consolidate merchant cash advances. Some lenders will look at only doing it for 2. Others can say we can do all of them. So it just depends per lender and your situation, balance, etc., how you're cash flowing in your business. Because if you're cash flowing heavily, a lot of them will just say, hey, if you have multiple, more than 2, we can look at that. Monthly repayment, let me move this up here. Fixed interest, but could be variable interest rates as the market keeps shifting. Right now, sometimes every 90 days per quarter if need be. Prime rates plus 1 to 3.75%. So more like 7 to 10 or even higher, like 9 to 9.5. Express loans, like I said, they can be a 6.25 right now plus 3.75. So at a minimum 10% to a minimum mid-range of 10.5. And if it's variable, that'd be a little bit more above 10.5 to 12.5 in some cases. You'll see that. So based on variable interest, and the markets are always changing around. And that's why I recommend, because of these variable interest rates, guys, don't wait to get something to fixed interest when you can't. And if you're an individual who, what happens is a lot of SBA 7A loans, there are no prepayment penalties for those terms 15 years and under 15 years, because it protects the lender with them saying, hey, well, if there's a prepayment penalty post 15 years, then that's because they want to secure that they get their money. Somebody who says, hey, I have an SBA loan or I have another form of a financing, like from a private lender, merchant cash advance or something like that, the lender hasn't gotten their gains back. So giving you a prepayment penalty ensures that you won't take this and go and refinance it for a smaller interest. And so this is why you kind of see that with prepayment penalties if you're exceeding a certain amount. But for a lot of these, there may not be a prepayment penalty. Just know that the reasoning behind why people do a prepayment penalty is so they can protect the lender from receiving their money based off fees and interests. And if you went ahead and said, hey, somebody else came up to you and said, hey, yeah, we can refinance this. You haven't paid enough of the balance. You paid before, and you tried to get it consolidated and do all these other things, the lender is not getting a return. So let me come back to this. Prime rates we spoke about, you can still apply if you have an EIDL loan and it doesn't affect it. And if you have multiple, if you already have an SBA loan, perhaps you have an express loan and you're looking to get a standard loan and you qualify for one, we can do those kinds of situations. Those are possible, and vice versa. You can still apply for this if you have that, and if you have merchant cash advances or other loans, SBA can consolidate. We just have to see how much is remaining on your balance you have, if there is any. And it's not always like we prefer you to have been paid off 50% or more of the balance, but if it isn't that scenario, the SBA is not going to completely shut you down, and they're going to see what projects you have in mind and how you're cash flowing and other purposes. So approvals for all factors, like documents such as personal and business tax returns, yearly financials, and profit and loss. But commonly you see between 10 to 15%, and then an additional amount that we can get approved for. Just look at it this way. Like what I said to another individual the other day is they wanted a personal loan. So if they had verifiable personal income, tax return income of $90,000 yearly, well, they were looking at getting somewhere between a minimum of $40,000 to $120,000. So if you do the numbers, if you get 10 to 15% of your annual gross sales, let's say you got approved for at a minimum of $180,000 plus what's happening personally, maybe that's an additional $200,000, an additional $40,000 to $50,000. On top of that, we look at your profit and loss. How much are you cash flowing? What have you made? Cost of goods sold. We look at that number too and base things off of that, and your expenses, your EBITDA, debt service coverage ratio, and how much you can afford to repay back, and how much we can afford to have you keep in your bank account versus taking everything away and then saying you're only left with a little bit, or having too much that it doesn't make sense that we're not getting paid enough on our end. And so all these things considered, real estate, collateral, you have the offer up, that can also change the dynamic, of how much you can get approved for. So you see individuals come into this with unpaid invoices of $1 million or so, and they go, well, I'm only doing a certain amount in revenue. They barely have the minimum, but they have unpaid invoices, and they can offer that up, get an extension in amount of time and for certain circumstances. So I don't want to get too far ahead and talk about what could your term length look like if you did this, if you brought in this. We can do that for another time, and I can speak with you individually. So over here, it's not that in-house soft credit pulls. We can start from the beginning, but just a lot of the times, SBA 7A loans do tend to be a hard pull when we get to that stage. And a lot of times we can let you know, and I'll let you know right now, that it's best to do things in-house and to make sure we can take a bird's eye view assessment myself with my team that I have assembled, and that we are with one another helping each other out, and that we take care of your file first and foremost. And that's the difference with getting a hybrid through here with my lenders is, hey, we can do everything all in-house, or we can do everything all in one spot. Instead of saying, hey, because I have other lenders in the SBA, I can send one to Ryan, to Ray, I can send one to Jeremy, to Susan, and say, hey, I have somebody in the car dealership space, I have somebody in the manufacturing industry or construction industry that has these details. I vetted them through, I pre-underwrote their file. This would be a good person to look at, and this is what they're looking to get, and they're offering this, they have this in play. And we can then say, hey, perhaps you wanted bridge funding in the meantime, so then I can go send you to this other lender, or we can look at that. Or we can do everything all in one place, so you're not having to be contacted by Jeremy, Susan, and 3 other people, and then you have me, and then you have 2-3 other people here who I have to work with in the underwriters, lenders, and part of the other parts of my team. Instead, you're going to get one communication channel, and perhaps it's myself directly, or it could be my teammates, but we're all CC'd usually, and we know what's happening in the underwriting process, as opposed to saying I have one here, there. But there are circumstances where it makes sense to do that. And I'll let you know if it makes sense to say, hey, we can look at getting you approved for an SBA loan here, or we go through the hybrid SBA loan where you can be looked at unsecured financing. But I would prefer, instead of getting the unsecured financing from them while we're getting approved for the MCA, or the SBA loan, this is who I prefer for this unsecured term loan. And this is who I prefer. If you're going to qualify for a cash advance and nothing else, then this is who I prefer you go with, because I have the best experience with them and they work better than somebody else you're going to be shown. But I'll let you know that ahead of time. And if it's not the case, then you just run with it without questions asked there. And now over here, underwriting checks. Let me move this over here. Credit is what gets people. So the SBA loans are based on profits. You have to be profitable for 2+ years, sometimes at least 10%. But just 2 years of profitability is what's most of interest. Sometimes it used to be like 1+. We can try, especially for the express loans. And even in some cases, that wasn't always a requirement. But 2+ years of profitability, but most recent 2 years is best. Low debt to income ratio, I would say less than 43%. If you're way less than that, even better. Minimal debt is what we want for a lot of cases. But again, if you're consolidating and you're making your payments on time, you're doing all these things, and it's adequate, it's good. And lower numbers are best. Low credit utilization, I would say less than 30%. Just know your cards or card, but keep it very minimal. Minimal inquiries, nothing bad on your credit reports like late payments, history of bounces, negative business cash flow, chargebacks, as I mentioned, bounce checks, cash flow, how is it going to help you service a debt, tax liens, and so on. Hard credit pulls can be for this program, as you see, but we do a lot of the in-house underwriting look before doing a lot of hard pulls, usually soft pulls. Plus, you have to demonstrate significant use of funds for growth and expansion, not just recovery like EIDL, but if you have it for consolidation, refinancing, and business operational expenses on top of that, then it's understanding. You'll need business credit established. At least have a decent paydex score. I would say good is better. If you have an 80 and above, best. But if you have less than that, I mean, we can look at it and see if your credit, your FICO, outweighs your business credit, and if you're cash flowing well enough, so we can override that, and we may not ask for collateral because of those purposes, and we'll follow up with you on that. And usually have it built with at least the 3 credit bureaus that are most important, not just Dun and Bradstreet, but the other 2 as well, and at least have something reporting accounts opened and that you're working on it. At 155, sometimes, like even for the express loans, there may be a little bit less by 140 to 145, But at a minimum, you want to have in this market of 155 FICO SPSS, and this is a determination on your business credit, but it also factors in your personal credit, and it's a number given to you. You can't always find this, but it's an assessment we give you during the underwriting, and we can show you. And sometimes you already know this because you've already been applying to this. Now let me come over here to I'll come to the comments in a little bit, but I want to finish this first. When you're getting over 350K, and if cash flow looks clean, you can show strength in business experience, like if you have it in your FICO credit, revenue, and more. So sometimes that FICO SPSS score wouldn't be so much of a factor, depending on the amount you can get, but make sure you're building. Collateral, it's not the primary part of the SBA that they determine if you get approved. Rather, it's cash flow first, equity, liquidity, and then collateral, whether liquidity is at starting or closing, depending on what type of financing you're getting. So if your cash flow is strong enough, that can help you service a debt. But to a degree, collateral is something that the SBA requires its lenders to pledge. The borrower should pledge, if so. Collateral can take on all shapes and sizes, like putting on a second mortgage on your house for the lender. You can also put a UCC filing on equipment. There's unpaid invoices, inventory, leasehold improvements. Sometimes if it's not fully collateralized, the lender then may require you have life insurance policy, term life, or other real estate you own free and clear. That's the key words there, free and clear. Or if you don't own it free and clear, we might put a lien on that / those. Any loan over 25K, it's usually secured with collateral. But again, like I said, if you don't have it or it's not sufficient enough, at least we'll want to see that. And if not, cash flow is strong enough, equity, liquidity, what kind of cash do you have on hand, perhaps to put down if necessary. You won't get declined for lack of it, collateral here, and for having limited amount of it. It doesn't mean we were not interested. It can at most times mean a hard no. And even if you don't have it or enough of it, the lender will at least ask for it. You will personally guarantee if you're 20% more of the owner. Also, don't have issues with this. This can decline a lot of individuals. Public records, no bankruptcies or foreclosures in the past 3 years. No outstanding collections, no open tax liens as well. No recent 30-plus day late payments, cash flow, and I would even say open liens in the last 3 years. Cash flow, sufficient business and personal cash flow to service all debt payments, demonstrated by 2+ years of tax returns, credit reports, and interim financial data. So make sure you have that situated. SBA specific criteria, no felonies, no delinquencies and or default on government loans. You can't use the SBA 7A loans for. No investment property use, such as an apartment complex, single family homes, or any kind of commercial real estate that is not owner occupied. There are still plenty of people who will come to me, and sometimes the lender makes adjustments to these types of things. So where you think you can get it for this, there's a different situation and there's a different way to apply. But that's the standard. You're going to see a no on that. And it depends, too, on the other side. If you have collateral, perhaps an apartment complex, maybe that's not something they want you to offer. So they won't accept it. Other lenders would have said yes. They would have thought of that and gone, okay, we can work with this to some degree. But others will go, for your specific industry, we don't want that. We don't need that. We will never do that. So documents needed, please email them to me. You can do that, or you can send it into via our portal. But a lot of the times I'll ask for it via email so I can organize it. A lot of the times Google Drive, it is very safe and secure. Don't worry about that. But you'll see things like 2021 business bank statements, 2022 recent 6 months of bank statements, 2020 and 2021 profit and loss and balance sheets, year-to-date profit and loss and balance sheets, at least through Q1, previous 3 years of business and personal tax returns. And sometimes, it depends on the year. So if we're in 2023 now, 2022 business bank statements, etc. And sometimes it could be through Q3, but Q1, you see there, previous 3 years of business and personal tax returns, aging AR/AP reports, if applicable, business debt schedule. If you have debt, application send via hello sign, I'll send that to you. PFS form, personal financial statement, I'll tell you if it's attached or not attached. We have a debt schedule, so if you can fill that out, you may have your own, but we also will want you to require this, submit some information into ours, either or in certain circumstances. I put in here, if you meet these requirements and are willing to be patient enough, I'm going to raise this up, because a lot of people, they say something and they do another. So don't be that individual wasting my energy and time if you're already thinking that, or you're sure you're not going to be able to follow through with it. If you meet these requirements and are willing to be patient enough with me to send me your documentation, a lot of it can be done via email. Of course, there are some other ways, but via email is a lot of the times, and it's very safe and secure. I organize this before I send it over to the lender. For what's asked for right above, and you don't mind waiting months to get your funds from the SBA, then we can explore this option. And of course, keep in mind, we can evaluate you for the term loan, cash advance, or line of credit So we can get you those funds earlier. And in the meantime, we're still evaluating you for the SBA. And if proof for the SBA, you can use that to pay off the existing amount you have in the others. It's like consolidating and putting it all underneath one big term, and put it all under one if need be. This usually doesn't require collateral. This is not its first look, as I already mentioned. 10 to 20% down payment if it's a business loan acquisition. A lot of times you see that 10%. Seller financing can raise that down payment a little bit more or less if they decide to finance more than 90%. Maybe they finance 100% of the transaction. But if they don't, that ends up kind of being a little bit more expensive because you bring out more out of pocket. And perhaps the term ends up being less than 10 years and ends up being between 3 to 5 years in most cases. So I've explained the rates for the cash advances and all of those, but with the unsecured term loan, and I've already created content on this that I'll link you guys to down below in the description in case you're wondering, what is this unsecured term loan? If I don't qualify for an SBA loan, or perhaps I'm looking for that on top of it or that alone. Well, these are 1 to 2 years, sometimes 1 to 5 years, depending on the lender, the requirements. But in this market, you're seeing a lot of 1 to 2 years. 3, yeah, we can push 3 years because banks don't always lend as much right now. It has to be exceptional, though. It has to make sense for 3-year return on that investment, for you to be that long in debt, for us to give you that. Maybe it's for equipment purchases, or maybe, yeah, for that reason and a little bit more. Maybe it's another thing with an acquisition. You're looking for a different situation elsewhere. And so we're combining a few sources, and you have to understand that. Use this funding for growth and expansion primarily. Everything else can come second per month. And a line of credit can be 1 to 3% per month. So you're seeing 1 to 3% there unsecured, 1 to 3% line of credit. The cash advance being 6 to 24 months usually, and you see 1.19 to 1.50 factor rate. You can also say in a way, we don't calculate it this way, but 19 to 50% interest, sometimes 90 to 70% depending on your revenue and what you have. But again, it's not like you need to take it and we can evaluate for the SBA solely instead. But what I recommend is you just go through it because it won't hurt you if it's a soft pull. At least you know what you'll get. If you don't want it, you're like, hey, I at least know I can get approved for $200,000. If I need it, it's sitting there. Oh, I had something change in the last 15 days. Oh, I wish I would have had that option. At least I know what I can get, whether I want it or not, or I need it. I'm like, oh, now I need it. Can I start off with a little bit? Maybe you have a little bit of negotiation power. You go, I got approved for $200,000, but can I start off with 100, maybe 50,000 with this? Boom, and then we move from there. Or maybe you don't have that much negotiation power because you are over leveraged. So I'll say, hey, if you can please send me the documentation and just a little bit more there. Okay, and then sometimes you see this kind of information that we'll need from SBA more or less. And then there are some other ones, but I'll let you know which is the best lender, which is the best route for you to take based upon all of that. Now, I'm going to conclude this video with this last part, and I'll come to the comments here momentarily. Thank you for being patient. So I have a questionnaire form here that I have been speaking about today that I'll link you to in the description that I created myself. And you can get the funding your business needs fast by completing this questionnaire form below to get a personalized and customized email response for your best funding option and options, plus get a free 6-step pre-approval lending checklist to get you approved for funding much faster. I've updated this with a little bit more, but for those of you who already submitted it before this, it's fine. And you're maybe thinking it's rather long, and it really isn't. You can honestly get done with this in less than a minute. You don't have to give me always the exact, but when I'm asking for like things like average monthly revenue, give me an approximate, give me a good estimate, close enough or exactly perfect. But you don't have to go scrambling for all of this. Just let me know. This is going to help me evaluate and analyze, pre-underwrite your file safe and securely. It's not an application. It's for me to see, okay, which lender is best for Jimmy, which lender is best for Sally. If she doesn't qualify for this, what can she qualify for in the future? Well, if you don't qualify for this, I'll still show you how to get ready for this. And then what's a more strategic partnership and roadmap longer term, I'll show you that. If you want ultimately to get an SBA Express loan, how do you get there if you're not there yet? What do we have to work on? Building trade lines, removing negative trade lines, building better business credit here, getting your FICO credit score up, getting at least 1 more year time in business for this specific industry, blah, blah, blah. So it goes on and on. You can get started on the thank you page a lot of the times here. So that'll be down below in the description, and I'll usually email you back on that. Comments. Melilami, hopefully I'm saying that right. Please excuse me if I haven't. Strong annual revenue, quote unquote. What do they mean in terms of money? Are you saying like what can you receive? So like I said, the SBA loan if that's what you're referring to, it's a factor of all. It's not just 10 to 15 to 20% of your annual gross sales. There's net income in play that can add an additional 10 to 15% in some cases. There is the profit and loss. Like I said, year to date, your personal tax return. Sorry, long video. Personal tax returns, we also factor that in. I gave you a few scenarios on that and how that can actually double, triple, quadruple the amount. And if you come into play with collateral, like some individuals out there do, where they would have probably been approved for 100,000, instead they have unpaid invoices of 500 to 100 to $1 million, and they're like, yeah, can I get an additional 400,000 based off of this? Then we look at it all. We can join everything. And if you have multiple, like equipment, real estate, etc., what kind of real estate? What type of equipment? Is it upgrading? Is it going up in the market? Is it downgrading? Is it going down in the market? So all of this stuff, I will keep you up to date. I know the lenders specifically for your situation, your industry. I deal with the best underwriters and the best lenders every single day. And I'm just smiling on that because I'm a bit tired of speaking. I know I've been in here for just over an hour. And I think that's what I will conclude with. Recap. SBA EIDL, Hurricane Ian, Fiona, a few other disaster programs. What's happened in the past, what's happening now, what can happen in the future, how to be more prepared. Hopefully you all are safe. And we spoke a little bit about the restaurant revitalization, not the restaurant revitalization fund exactly, but more pertaining towards the EIDL loan and how there's been this documentation and letters back and forth with Administrator Guzman declaring that they go ahead and drop the interest rates, defer the payments, and defer the accrued interest over that 30-month and more. Will it get done? I mean, only time will tell, and it's only on a day-by-day cases. Could see this now, and then tomorrow it change, or within later this day. And so I'll always keep you up to date on all of that and what you can do to transition. ERC program, Employee Retention Tax Credit, PPP, more or less, grants if you guys want to. I didn't speak about that, but down below I'll try to leave more documentation, startup funding, non-startup funding. And at the end of the day, don't just think about applying anywhere and everywhere. And I'm not saying that to just have you come to me. What I'm saying is if you're just applying anywhere, you may not be. But guess what happens? You shared your information, and then that person or that organization, lender then, or broker, whoever it is, then shares that information with another third party. And then that third party probably does it to another one. So your information is just being shopped around in ways you wouldn't want to. There's one way of shopping around that's best, where we protect your privacy, and I would recommend that, and we don't do anything fraudulent. There are other cases where directly to one person is best, but in other ways it's not, because we have to look at an overall view, and I'll let you know which ones. And so doing that, your information gets stored on the credit bureaus, then lenders, organizations, ISOs, brokers, if they can, they'll get their hands on it. They'll go to the highest buyer bidder. And so they'll call you, contact you, email you, tell you to sign contracts, send them the bank statements, go and start an application. It's overwhelming, frustrating. I have a lot of those emails because I received funding in the past. And I haven't applied to some of them, and they're getting my information, and they're asking me to send them bank statements. There's been a lot of circumstances where I've had frustrated individuals because they thought I was the one, the corporate, causing those problems, and it isn't me. I work with the best lenders and underwriters. It just happens from time to time where, even the best lenders have this happen to because they have no control, because the credit bureaus then have that information. It's just the faulty lenders, the faulty people, and whether they say they're good or not, they may act as behalf of my party and say, hey, remember funding with Micro Funding Solutions or whatever? And you're going to go, yeah, but this isn't Michael. Who's this? So with me, you're going to know if it's me or not. With me, I'll let you know if it's going to be someone else that is going to be looking at this and how we follow up. You don't want to be caught out of the blue. And a lot of companies, even, I'm not going to name them, but even those who advertise you see online, you have to be careful, because it's happened in the past where I've sent some referrals, but it's been more now than ever where they take an individual through a robotic machine, and you don't want that. You want something more personalized, somebody who actually cares about you. You're not a number to them. I'm not thinking of you as a number when I speak to you. You're somebody who has feelings. You have emotions. You have something to express. You're not ready now. It's fine with me. I'm not going to go over there and knock on your door or call you or text you, email you. You're an adult. If we spoke about this, just know I'm a punctual person and you're in safe hands, not the best hands. But what happened and what's happened to other individuals is they go to those platforms that think they're very reputable and they want to get multiple offers. It's not the best way to do it. You may not always get the best offer. You got to question that if you're getting the best. But they'll bait and switch. They'll go ahead and say, hey, well, you're qualified to get an SBA loan or you're qualified to get an unsecured term loan line of credit, but then they'll try to promote a merchant cash advance. And they may be righteous or they may not be. And they're saying, hey, they're just trying to push their own agenda so they can make the most money in their business because that pays them the most. And I don't look at it like that. I don't care if a merchant cash advance would pay me more with commissions. That's what I care less. I really do. Like, I care about, hey, Brian here, they qualify for an unsecured term loan. I don't care if I don't get paid on this. I care about them, and I care about the long-term relationship that I have. Okay, well, we work from an unsecured term loan. We work our way to an SBA Express loan. And so that's what I care about. And I'm always thinking about, how do you start off with an express loan? If you don't start there, what could be the one before it? If you're looking for 2+ years in a term loan, perhaps an unsecured term loan can help, but it's better at that point to look for an express loan, maybe not a standard SBA 7A, or it does make sense. Or we look at getting you bridge financing. In the meantime, you're still building your business credit with myself, with my team. You have your personal credit that you're keeping more stable now. It's not just fluctuating. You're understanding how not to take on more than you should. And these are just a few things. There are a lot more factors, as in I ran a digital marketing agency for quite some time. I still have it, but it's just very minimal on what I focus on because I focus on funding mostly. And I have affiliate marketing businesses. So I did those before I got into this space, which I ultimately wanted to get into. So with me, you get a lot. With me, I'm going to show you how to market yourself. I'm going to show you how to, perhaps you're looking to run ads for your business, or you're looking to use a form of organic marketing. Perhaps it's on SEO, blogging, YouTube. Perhaps it's on social media, Facebook, Instagram, perhaps TikTok. Or how do you create a value ladder where you're have this front end product and then on the back end you have this, and how do you retain customers? How do you have long-term vision, the long-term value of that customer, conversions, maximizing your business and exposure and doing things correctly? So I know it's a dark screen right now because of the lighting, and that's what I will leave you guys with. Appreciate you all for tuning in. Look down below in the description for the questionnaire form and for everything else to get started. And I will talk to you all soon.